Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. This is a big ass show. I have a ton of stuff for you, so get comfortable because here goes from Wall Street Breakfast. Let's take a look back first. The benchmark S&P 500 on Friday notched a third straight week of gains, and the index has now erased nearly all of its April losses. The S&P is also now just 0.6% shy of its record closing high. This week's advance was driven by an uptick in Fed Reserve interest rate cut expectations, primarily on the back of further evidence that the highly resilient U.S. labor market was cooling down and some dovish actions from European central banks. This week also saw the first quarter earnings season chugging along with hundreds of companies reporting their results. The most notable was Disney, which delivered a surprise profit in its streaming operation for the first time ever. For the week, the S&P added 1.9%, the blue chip Dow rose 2.2%, and the tech-heavy NASDAQ composite climbed 1.1%. Okay, first I want to talk about the VIX, the CBOE, the index tracking the implied volatility of VIX options. That fell to its lowest level since May of 2015. Let me say that again. 2015, people. This past week had the first, second, and fourth lightest notional volume days of the year. This is the exact opposite of the adage, when there is yelling, you should be selling. Okay, it is deathly quiet. The Dow posted its 8th consecutive green day. That's the longest winning streak since December. And according to the market ear, it's way too quiet and calm to short into this market, leaving everyone wondering if this is the calm before a melt-up storm. Earnings to watch for this week: Walmart, Home Depot, Alibaba, and Cisco. Yeah, now that's what I like to see from Friday. Novavax's 99% surge gives rib-crunching squeeze to shorts. Stock climbed after $1.2 billion licensing deal with Sanofi. S3 Partners said paper losses amounted to about $255 million. Novavax Incorporated's record one-day gain is forcing some short sellers betting against the stock to exit their positions at a loss. A jury was chosen on Thursday in the criminal racketeering trial of Bill Hwang over the 2021 collapse of his $36 billion fund, Archegos Capital Management, setting the stage for opening statements and witness testimonies next week. It's my guess that instead of taking a plea deal, Billy opted for a jury trial, and that means prosecutors are going to have to expose all the dirty shit that brought about the collapse of Archegos, and we're going to shout every detail from the rooftops. And Uncle Frank's not the only one talking about it anymore, guys. From Friday, what is a Black Swan event? Well, a Black Swan event is an event with potentially severe consequences that is impossibly difficult to predict. Tell me about it. Before 1997, no person in Western civilization had ever seen a black swan. Hence, the term was used to describe the impossible. The term was then popularized by former Wall Street trader Nassim Taleb in 2001. Taleb wrote about the concept in his book, Fooled by Randomness. The three defining attributes of a black swan event: 1, an event that is unpredictable; 2, the event results in severe and widespread consequences; 3, hindsight bias will lead people rationalizing the event as being predictable after its occurrence. Real-world examples of black swan events include the 9/11 attacks, the dot-com bubble, and the 2008 global financial crisis. I would like to remind my viewers that hedge funds took a serious hit due to that 2008 global financial crisis. Nearly 700 hedge funds, 7% of the entire industry, shut down in the first 3 quarters of 2008. That was up over 70% from the same period the previous year. Now you know why Uncle Frank is Black Swan crazy. Really dumb people on Twitter talk about a magic dividend that will give us a victory on the AMC trade. Really smart people know you can't fight predatory short hedge funds, prime brokers that back them up, regulators that let them cheat, and a dirty senior management team with more distressed credit private equity executives on it than theater business executives. We're going to require a Swan event to win this fight. Just my opinion, not financial advice or advisor. Some fascinating headlines from last week for the original meme stock. GameStop shares surge again to register highest close since December. And then from Barron's, GameStop stock has rocketed 60% in May. Short squeezes and meme mania are back. Well, not for AMC. We have Adam Aron, and he has the support of the fanboy morons. Really dumb person, Crystal Ballsack, Dade, Little Bigums. These people still can't see how this guy has screwed them 600 ways from Sunday. If Adam does try to reverse split the stock again, these people will be most responsible because Adam thinks he still has support. And then from Benzinga, what's going on with GameStop stock? Is Roaring Kitty active again? Traders are circulating a social media post from Thursday, which appears to show recent activity from the Roaring Kitty's X account. The Roaring Kitty account liked a post on X dated February 14th from a movie account referencing the film Run, Lola, Run. It's too bad the Adam Aron ass sniffers allowed him to divide our community, because you can already see how the financial media fears a return of Roaring Kitty. What they should be afraid of is 3 million Roaring Kitties in the form of AMC apes, but they're not anymore. In 2023, securities lenders made more money loaning out AMC to be shorted than any other security in the world. But did you hear any mention of that during our earnings call? Any pushback from your CFO, your CEO? Of course not. That fat pervert goes out of his way to deny anything like that is going on at all. Do you realize that that is a statistical impossibility without the existence of synthetic shares, in my opinion? So let me get this straight, Adam Aron taint lickers. There are currently 295,590,000 shares outstanding reported for AMC. If there are only 3 million apes left, that means we each only own 98 shares apiece on average. Everyone I know owns 10 to 20x that amount. You still really believe your CEO doesn't know that? He knows there's 1 million members in Investor Connect alone, but he doesn't know his company's stock was the most profitable stock to lend out in the world in 2023? Did he mention during the call even once that our stock price and market cap are down 94% year over year, while our nearest competitor, Cinemark's market cap, is nearly 2.5 times ours, even though they're smaller and don't have nearly as many new revenue streams going as we do? Do you think our piece of shit CFO might mention that Cinemark has approximately 120 million shares outstanding, but institutions own 134 million? What's that, 112%? Do they have any retail shareholders over at that theater? When are you people going to admit we have to get rid of this distressed credit, private equity piece of trash that runs our company? Or are you waiting for the next reverse split? Let me guess. There's going to be a CUSIP change, and it's going to cause a MOAS, right? Wake up. Well, we better start keeping an eye on Hycroft again. According to Street Insider, Hycroft Mining has filed a $350 million mixed shelf of Class A common stock, preferred stock, warrants, rights, debt securities. Wow, not a lot of information on this out there yet, but the stock closed down 7.91% on Friday on the news. Now, for those of you that are new to AMC, Hycroft is the previously bankrupt gold mine penny stock Adam invested $28 million in when we were over $5 billion in debt ourselves. While according to court records, at the exact same time, he was texting images of himself engaged in a sex act to a complete stranger on his phone. This is excellent judgment. He ended up being catfished and blackmailed. Now, gold is near all-time highs on U.S. rate cut hopes, but Hycroft is still down 96%, exactly like AMC over the past 60 months. Hey, at least it trades higher than AMC does. Am I right? GME, in contrast, is up 678% over the past 5 years. Now, are you sure we don't need a new CEO? After all, our burn rate might be a little less shocking if we didn't pay Adam Aron nearly 4 times more than the CEO of Cinemark, and then pay our senior execs like there never was a pandemic or a writer's strike. I've always wondered, why would our CFO, Chief Financial Officer, approve an investment like this? I mean, after all, Hycroft used most of the money to pay down debt owned by short sellers and or put holders against AMC, Mudrick among them. Now, according to Macro Access, HYMC has a 74% chance of bankruptcy, and that number was higher when we made this investment, I believe. Now, I might have a theory. Did you know your CFO, Sean Goodman, was given a board seat over at Hycroft? Did you know he's the second highest paid board member at Hycroft, even though he doesn't know a heap leach or a milling operation from a donkey's ball sack? That's right, he pulls down an additional $168K from Hycroft just for jumping in on some Zoom calls. Yes, this clown comes from Morgan Stanley, the M&A department. There's a real shock. They run our board of directors after all. But Sean's done a fantastic job. He really has. You Adam Aron fanboys are lucky to have him. He has never bought a single share of AMC while he's worked for us, but sold just under $17.5 million worth over the past 4 years to us, you stupid asses. In the year of the pandemic, we paid him over $4.2 million. By 2022, he was clocking over $6.2 million. And you still can't see it, can you? You still can't see Adam and his team bleeding out our business. Hey, Sean, I want you to know, I hope everything you did to millions of shareholders and their families returns to you and yours sevenfold, you simp. You had a fiduciary duty to protect us, and you gladly signed off on the ape, its conversion, the reverse split we never needed to do, and this investment in Hycroft Mining. I hope you can spend all that money in hell someday. About a month ago, we learned that Antara, Adam Aron's alleged partner in the alleged vote rigging scheme, made the headlines. 1 month ago, Blackstone-backed hedge fund Antara freezes illiquid assets. And then, just 3 days ago, inside the growing alarm over Blackstone's BRICS real estate fund. Blackstone's real estate fund, BRICS, boasts assets of $114 billion. But is it a house of cards? Uncle Frank is watching. Remember, it's Citi, our chief investment banker and short seller of AMC, that introduced Adam Aron and our senior execs to Antara Capital. While Adam was wildly excited about the forthcoming movie slate during this last earnings call and bragging about the Billie Eilish event, which our investor relations department didn't issue a press release for, just a tweet from Adam. This is what the Post had to say. Hollywood bracing for its worst summer at the box office since 2000, as experts predict a $1 billion falloff. Now, guys, I'm not here only to give you good news and hype. I'll leave that up to Really Bad Person, Little Bigums, Crystal Ball Sack. I give you both sides of the story. Summer box office bust. This season's movie slate could put up the lowest haul in decades. Now, do you remember the earnings call from the third quarter of last year? I do. It was the best third quarter in the company's entire history. And that includes pre-pandemic of 2019. The same metric they shove up our ass in every hit piece, right? After the call, it was a miracle. The writer's strike had ended. It was one of the best trade setups I'd ever seen. I thought AMC was going to rocket the next morning. But that night, something strange happened. Even though we hit the quarter out of the park, even though the strike was over, the stock didn't budge in the after-hours session. It just sat there. Adam never mentioned any dilution plans during that call. But the next morning, pre-market, he dropped the dilution bomb, killing the rally before it ever could begin. Now, the fact that the stock didn't move after the call, after hours, tells me Wall Street knew about Adam's dilution plans, but the shareholders didn't. These headlines should explain why that third quarter was so important to us, the shareholders, the people that own the company. That may have been our last chance for a long while now to get a big rally, so we could sell stock at higher prices and pay down debt, instead of Adam's way, where we drive down prices to assist Wall Street and sell at near record low prices. Some economists think that while the consumer was spending, they may have finally run out of money and credit. That's concerning when you add this headline. Fear of inflation goes rampant among U.S. consumers. U.S. consumer sentiment has dropped to a 6-month low of 67.4, indicating increased worries about inflation and the job market. Consumers now expect inflation to rise by 3.5% over the next year, making the highest expectation in 6 months. Interest rates are projected to remain high, dampening purchasing conditions for durable goods and affecting consumer spending habits. Question is, how will it affect movie theater foot traffic? None of the hit pieces I've read care to mention that in the past, theaters have been where Americans went for entertainment when the economy shrank. During the last 8 recessions, box office sales increased 6 times over. I guess that'll be our little secret. But if the fear of inflation is rampant, as the headline suggests, and they're finally out of money and credit, that may hurt us this summer too. But maybe they're wrong again. From Deadline, Kingdom of the Planet of the Apes orbits $52 to $55 million opening. Friday PM box office update. This summer release looks to be meeting its tracking projections. Wes Ball's Kingdom of the Planet of the Apes from 20th Century Studios, the first Apes release under the Disney Empire, is looking at 21 to 22 million today, which includes previews, for what is looking like a $52 to $55 million opening at 4,075 theaters. Tracking saw it around 50 million at the time of this article being published. Me and the wife are going back to the theater this weekend to see Kingdom of the Planet of the Apes. I want to be clear with my subscribers. This is not the Black Swan Uncle Frank was hoping for. Losing world reserve currency status was not what I had in mind, but this shit is looking uglier by the day. BRICS prepare for US dollar collapse, IMF warns. According to the Russian IMF representative, BRICS is ready to offer an alternative to the US dollar amid the currency's collapse. BRICS countries to stop trading in US dollar, plans to introduce new currency. BRICS, North Korea knocks on the door. Discover how North Korea aspires to join the BRICS, a movement that could redefine the economic balance. From the editor, proposed BRICS grain exchange worth monitoring. BRICS alliance considering starting an interblock exchange. BRICS, top economist says U.S. dollar is getting worse. Leading financial economist and author warns that the prospect of the U.S. dollar is only getting worse. BRICS continues stockpiling gold in massive numbers. The BRICS Economic Alliance has continued stockpiling gold in massive numbers, with China amid a 17-month acquisition streak. BRICS, China gold's buying spree to end the US dollar, BRICS to announce new currency at October summit, and 5 new countries looking to join the BRICS alliance. Guys, how much do you want to bet? The U.S. taxpayer gave billions of dollars in annual aid and support to some of the same developing countries that are joining BRICS in an effort to take down the U.S. dollar. If this actually happens, I predict you lefties are going to gain an immediate appreciation for the mean tweet president. He would have never let this progress this far on his watch. Apparently, Citadel was talking some shit last week. Citadel Securities is setting revenue records, CEO Zhao says. Citadel Securities Chief Executive Officer Peng Zhao said the market maker is running at record pace as it benefits from its expansion into new products and geographies. Hey Peng, a lot easier to win when you cheat, bruh. I remember when your firm got banned in China for illegal short selling, do you? That also reminded me that Binance founder Changpeng Zhao was forced to step down as CEO last week and is headed to prison. Maybe you guys will play ping pong in jail together someday. Well, guys, I owe you an apology. I thought this swan was going to land months ago. Uncle Frank was a little early, and this train wreck appears to be happening in slow motion. Fed flags rising delinquencies in commercial real estate loans. Banks are preparing for further losses as delinquencies in loans tied to office space continue to rise, according to the Fed Reserve. I don't know what to say, guys. When even the Fed Reserve is bitching about something, that normally means it's a serious problem. From MoneyWise, $929 billion in commercial real estate debt is about to come due. Will America's regional banks survive the storm? Entrepreneur Tom Ellsworth believes a crisis is about to happen in the U.S. banking system. And a new report from FAU, almost 300 banks are at higher risk of failure. Warning signs of Republic First Bank's failure were evident for a while, and now more banks across the country are exhibiting similar signs of a risk of failure, according to a finance expert at Florida Atlantic University. The risk factors of Philadelphia-based Republic First Bank's potential to fail were hiding in plain sight, as banks must report the market values of their securities in their quarterly regulatory filings. Quote, the same risk factors, unrealized losses on investment securities, and heavy reliance upon uninsured deposits that brought down Silicon Valley Bank also brought down Republic First. These risk factors triggered concerns of both investors and depositors about the viability of the banks when the banks announced efforts to raise additional capital before actually securing these additional funds. Other banks in the country could be at risk of failure as unrealized securities losses reached $478 billion, the most recently available data shows. Already, 40 banks with more than $1 billion in assets reported unrealized security losses greater than 50% of their equity capital. More than 200 smaller banks have done the same. Well, after only 14 short years, the CAT, or Consolidated Audit Trail, has arrived, and I have 2 event dates to report on. May 24th, last day for interim reporting obligation 4, and then May 31st, customer and account information compliance, go live. For those of you that don't know, the CAT tracks orders throughout their life cycle and identifies the broker-dealers handling them, thus allowing regulators to efficiently track activities in eligible securities throughout the U.S. markets. Now, when Wall Street doesn't want something like the CAT system, they get the financial media to do hit pieces. You guys have experienced this phenomenon, yes? Let's start with the Wall Street Journal back in September of 2023. The SEC wants to spy on your portfolio. The Consolidated Audit Trail will record your Social Security number and all your stock trades. You see, they're violating your privacy. Then, from Traders Magazine, January of 2024, How can a new government program that most Americans have never heard of cost so much? You see, it costs too much. We can't afford it. Then, from Reuters, Citadel Securities and a trade body sue U.S. SEC over Consolidated audit trail. You see, the dog that barks the loudest has the most to lose. Then Bloomberg, a week ago, Citadel Securities lead suit to gut SEC trading surveillance. You see, we've gone from trying to kill it to gutting it, to declawing it, so to speak, right? Now that's what I'm worried about. At the finish line, are they going to hand out all kinds of exceptions and ways around the rules so Kenny and others can continue to cheat? The other thing I'm concerned about is, will it be retroactive? In other words, I have this feeling that if this system goes live, everyone will have to follow the rules from here going forward. It may not expose all the bullshit we've had to deal with in the past when it comes to the bad actors on Wall Street. Look, guys, I've rooted for this kind of shit since the boat I row, okay? But forgive me if I don't get too excited about this kind of regulatory crap. Call me a cynic. I just don't believe Gary Gensler, the guy that presided over taking away the buy button, has permission from Washington to install a tracking system that will upend hedge funds, their prime brokers, maybe even take down a clearing firm or two during an election year. Those are messy headlines, am I right? But I rooted for Phase 6 and NSC 10.0, whatever, so I'll root for this too. Now, Uncle Frank, aren't you worried about the government and privacy issues? Well, to be honest, I think we've already lost that war. I think the government has the power to poke their nose into anything I do at this point. Call me crazy, but I think the government already has my Social Security number. I'm just praying they don't share it with everyone. Wow, look at this, guys. FINRA is running around handing out fines like hotcakes. This is just this past week. FINRA fines Merrill Lynch $825,000 over order execution supervision lapses. And then FINRA dings Oppenheimer $500,000 for supervisory failures. And then FINRA fines SoFi $1.1 million after consumer identification flaws led to multi-million-dollar heist. Well, maybe if you guys use the new CAT system, we can make these fines go away. Of course, you'll have to stop cheating and stealing from retail, I guess. So what did Merrill Lynch do? They're owned by Bank of America. Uncle Frank wants to know, why did they get this parking ticket? They could be cleaning house to make way for the CAT system, guys. Pay close attention. Merrill Lynch has agreed to pay $825,000 to settle allegations by FINRA that it has failed since 2017 to properly supervise certain retail orders to ensure that it met best execution obligations and record-keeping requirements. The brokerage's supervisory system has had lapses in reviewing the timeliness of order executions processed through its electronic order systems, the industry's self-regulator said in a May 9th letter. Self-regulator, that always cracks me up. Specifically, the system reviewed orders from the time they were routed to a market center until their final execution, FINRA said. But it failed to capture the prior time period during which the orders were entered and verified for accuracy and regulatory requirements, FINRA said. Since 2017, Merrill has had 5 electronic order systems, and during a 3-year sample period, received nearly 300 million electronic orders through those systems. FINRA did not make any allegations that customers were harmed, but referenced its Rule 5310, which requires brokerages to use reasonable diligence so the resultant price to the customer is as favorable as possible. In addition to the fine, Merrill consented to a censure and to certify within 90 days that it has remediated the issues identified and implemented a supervisory system reasonably designed to achieve compliance, FINRA said. And they get a lot of wiggle room here, don't they? A spokesperson for Merrill, which agreed to the settlement without admitting or denying FINRA's findings, declined to comment. So no one is fired, no one is disciplined. We're going to blame it on all the software programs. No one loses their license. They've got 90 days to continue cheating, or who knows, they may get another tiny fine. A coin on my watch list made it into the daily hodl on Saturday, so I wanted to share it with you. This Chainlink competitor could explode by up to 230% from current levels, says Arthur Hayes linked crypto fund. From the article, Maelstrom Fund is expressing bullish sentiment on a relatively new blockchain Oracle digital asset. The early stage fund says that Chainlink rival Flare, or FLR, is likely undervalued. Quote, Chainlink's early mover advantage has given it a sizable head start, with countless projects having already integrated with its services. However, as Flare gains traction, it has the potential to quickly catch up to Chainlink. To better illustrate Flare's potential, Maelstrom Fund says that the fully diluted valuation of FLR is currently about 23% of Chainlink's, even though the upstart has less than 10% of the project integrations that the Ethereum-based Chainlink already boasts. The fund says that unlike other Oracle providers, including the Solana-based Pyth network, Flare can also build its own native ecosystem. According to Maelstrom, if Flare reaches 50% of Chainlink's fully diluted valuation, the FLR token could go up by approximately 2.2x. If Flare reaches only 75% of Chainlink's fully diluted valuation, FLR could soar by 3.3x, says the Arthur Hayes linked crypto fund. Right? So at the time of this recording, Flare is down about 9.35% for the week and off over 24% for the month. So I'm sticking a toe in the water here at 0.028 cents. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. Full disclosure, I'm long Flare at 0.028. Well, guys, we all know it's coming, but it's still a little terrifying when you actually see it happening. From the Daily Hodl on Friday, bank to abolish cash, warns customers to prepare for massive digital overhaul. One of the largest banks in Australia is rolling out a plan to terminate cash and checking services. In an update on its website, Macquarie Bank, which has $267 billion in assets, tells customers that a digital-centered banking experience will begin in November. Quote, in case you missed it, we're phasing out our cash and check services for all products. To prepare for this change, you'll need to start transacting digitally, a safe, quick, and more convenient way to bank. We're removing our cash and check facilities in a phased approach. The bank says customers will no longer be able to access a list of the over-the-counter services at Macquarie's physical locations, nor deposit or collect checks or order new checkbooks. Once the changes are rolled out, Macquarie customers will only be able to withdraw paper money from their accounts using ATMs owned by rival banks, with withdrawals capped at 2,000 AUD per day. The move comes amid a broader shift away from cash across the country. A total of 424 bank branches, representing 11% of all banks in Australia, were closed from June 2022 and June 2023, according to the Australian Prudential Regulation Authority. At the same time, banks removed access to 718 ATMs. Australians held a rally on April 2nd to protest the widespread closures and bring attention to the country's move away from cash. All right, you're not putting a chip in my head and no barcodes on my hands or forehead, so you can forget about it. And once again, Uncle Frank is way too early for his own good. Me and Gary Gensler's favorite crypto project, Ripple XRP, was working with that same exact Australian bank over 3 years ago through a consortium named R3. Here's the headline. 12 R3 member banks trial cross-border payments with Ripple's XRP over its blockchain. From the article, 12 member banks of the R3-led Banking Blockchain Consortium have trialed Ripple's native digital currency token XRP using the fintech startup's blockchain technology. The trials were conducted at R3's lab in an effort to demonstrate cost-cutting and increased efficiency of cross-border payments using Ripple's digital asset. The 12 R3 member banks involved in the trial include Barclays, BMO, CIBC, Intesa Sanpaolo, Macquarie Bank, National Australia Bank, Natixis, Nordea, Royal Bank of Canada, Santander, Scotiabank, and Westpac Banking Corporation. Yeah, you see, the $267 billion Australian bank I told you about that's going completely digital this year on the previous slide tested XRP 3 years ago for cross-border payments. And from Coinpedia Saturday, Ripple CEO Brad Garlinghouse is confident they will win the lawsuit against the SEC. Garlinghouse predicts a $5 trillion crypto market by year-end and a price increase for XRP as the lawsuit resolves. Ripple's consistent stance is that XRP and Ethereum are not securities, contrasting this with SEC Chair Gensler's negative view of crypto. And recent tweets about the boss. Ripple CEO Brad Garlinghouse warns about a Black Swan coming. He discusses how the U.S. government is coming after Tether as well. When Ripple and Brad warn about something coming, you all better listen. And from Eleanor, Ripple CEO Brad Garlinghouse says Ethereum is not a security and XRP is not a security, and that the SEC is grossly wrong and Gary Gensler is an unethical human being. That's how a real CEO gets down. Now, they slipped this article out on Sunday morning. Bankruptcy filings at highest in a year as interest rates bite. S&P Global said the pace of bankruptcies has picked up since the start of 2024, although the 210 filings logged through April is marginally lower than the 224 recorded over the same time period last year. 3 companies had more than $1 billion in liabilities when they filed for bankruptcy protection in April. Last month, bankruptcy experts Epic said total commercial Chapter 11 BKs jumped 43% year over year in Q1 to 1,894. Now here's the part I want you to notice. It said March marked 20 consecutive months that total individual and commercial bankruptcy filings logged monthly year over year increases. 20 months in a row, guys. We call that a trend. And from Showbiz 411, hard not soft, Billie Eilish sells out most of her $5 AMC Theater listening session events for new album. Where's our investor relations department, guys? No press release for the event? No announcement that it's sold out? John Merriweather never gives updates on retail popcorn sales, merchandise items that sell out. Every time we open a new location, there should be a press release. Why is this guy so quiet when our stock price is down so dramatically? Did you ever think he was told to be quiet? Why do we only advertise in the theaters? Wouldn't we benefit greatly if more people knew about the A-list program? And let's wrap this one by saying this. I still say the hedgies have more to worry about than we do. Tuesday, we got PPI. Wednesday, we got CPI. Thursday, that Billie Eilish thing drops. Next Friday, the 24th, we've got Furiosa Mad Max coming out. And then the big cat appears on Friday the 31st if they don't declaw the thing. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.